Welcome back. 6 months of protests, and now Thailand is under martial law. The land of smiles has been rocked by bouts of political instability over the past 8 years. Previous incidents have had muted economic impact, but as Chok Heng Ret finds out, the impact will be felt harder this time round. Still, there remain compelling investment opportunities in Thai equities.
They're fighting for evil for themselves, not for Thailand. They sell for themselves. And for us, we said.
May 20th, martial law is declared in Thailand. 2 days later, the military stages a coup. It's the latest twist in the near decade-long struggle between supporters of former Thai Prime Minister Thaksin Shinawatra and his opponents.
It's probably a good positive step in the short term in order to prevent more violence, but it's not a solution to the political problems that Thailand has.
The Thai economy is already feeling the chill of 6 months of protests. It contracted 2.1% in the first quarter from the previous quarter. That's its worst quarterly performance since the fourth quarter of 2011, when the economy was hurt by severe flooding. Thailand could now slip into a technical recession in the second quarter.
What's more interesting, Kane, is really just to figure out how long will this last, how many more quarters of negative growth we're going to see in Thailand. Because at this point we think that in the second half we should see some recovery in personal consumption growth in Thailand, but private investment that is still going to be very, very weak unless that we see a boost from a functioning government in place.
The economy will be hit harder this time round compared to previous bouts of unrest. In 2010, protests by Thaksin supporters ended in an army crackdown. At that time, the economy managed to grow 8% after contracting 2% in the previous year.
The key difference with the political crisis this time around compared to 2010, for example, is that this happened in November, December, January. That is typically the peak of the tourism season in Thailand. So we have seen that foreign tourist arrivals into Thailand is about 20% lower compared to the pre-crisis.
We're actually going on the 5th of June, but we are not sure whether we should go or not. Because of this martial law thing, then we have kids going.
I'm going for holiday. Politics doesn't affect me.
Tourism makes up about 10% of Thailand's gross domestic product. And with the government paralyzed by the protests, spending has been put on hold. So a coup could just be the solution to revive the Thai economy. ANZ Bank says the military takeover could end the months-long political fighting that has hampered government decision-making. The budget for the fiscal year starting October may even be delayed.
The government can't pass a spending bill, so they have a very large infrastructure bill that's pending. It's about 80 billion US dollars, mainly for rail, fast-tracking rail, double-tracking rail, metro rail, but they haven't been able to get that spending bill passed in the parliament because the parliament essentially hasn't been functioning. So for 6 months they haven't been able to pass that bill.
A non-functioning government also means foreign investment projects are left hanging in the air. Thailand's Board of Investment says 200 foreign investment projects worth 12.3 billion US dollars are still awaiting approval.
Several weeks there were no directors of the Board of Investment in place because the government couldn't appoint new directors. And so if you went to the Board of Investment to have a plan approved, an investment plan, there was nobody to approve it.
DBS has cut GDP growth forecasts for Thailand to 1.6% year-on-year growth in 2014 and 3.8% in 2015. The stock market has, however, remained quite resilient. Local retail investors have been supporting the market.
They are positive about politics. That could be one reason, but the other reason could also be due to the fact that they are encouraged by this tax saving scheme for them to continue buying into the equity market. Basically, it's a scheme called LTF, long-term. It stands for long-term investments, that basically you would have to be holding your investment for 5 years, and because tax rates in Thailand is pretty high, any tax saving scheme would be welcome.
Aberdeen sees value in Thai equities for investors who are in for the long haul.
We do like consumer stocks. We have positions in that because we are quite long-term. I think other places where we have positions in would be in sectors or companies that have earnings that are less correlated to the Thailand operating environment and probably more correlated to the global operating environment, such as petrochemical sector.
The fund manager is even eyeing the tourism sector.
If the political crisis were to prolong from here, I think the fear is that there will be further earning downgrades, and that could be a catalyst for further stock price correction in the short term. Tourism is a fear sector right now because that it has a direct impact from the political environment that we have been in currently. But if valuations were to correct from here, I think we are likely to be buying the sector because in the long run, I think the attractions for tourism in Thailand do stack up very well.